There is one stock that is about to skyrocket. This company just had a revenue in the 100 million plus, beat consensus. They also had in-force premium grow 20-30%, which is a big deal for this insurance provider. They're really a marketing insurance company. The ticker is Lemonade, LMND. And what they do is they connect consumers to insurance plans, and they get a little kickback from that. And they do that online with online advertising. So who would have thought basically a marketing company could be valued at such a high market cap, also beating earnings with such a strong earnings reaction. So let's take a look at the stock.
This is Sam Putnam.
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 So here's Lemonade. There's the revenue above the consensus. That net loss was less than expected. And this is the premium growth year on year. It's $1 billion of premium. I believe that's like what they wrote or was written based on their customers they acquired. So if they get, a 20% of that, that would sort of check out as far as what their revenue was. 20% seems a little high, but believable. I mean, these customers are highly, highly profitable insurance customers because they don't churn, right? How often do you switch your insurance? Less often than like your streaming probably, or your, maybe your phone bill you keep for a long time, but you get the idea. So gross profit margin improved as well. And they raised guidance. So that's basically the recipe for success on earnings, where you have the earnings per share being better than expected. It is negative, but better than expected. And then the guidance being raised as well. So solid reaction. And then, as always, wait for the candle to close. There's a level somewhere in here, around 74. Or you can buy above that and then risk $1 to make 10 or more. So that's always the game plan. This is the chart. This stock has gone on a run for sure since April. It's now up almost 200%. And they are one of those startups that survived the post-COVID trough. So solid volume, solid reaction, and solid levels. Now, Lemonade does have some problems, right? Unprofitable. And that's a problem for an advertising company for sure, given that their whole job is to buy customers and make money on that split between the acquisition and handing the customer off to the insurance company. And if they can't do that, it kind of raises some eyebrows. Like, I get that they have costs, but the costs are mainly advertising itself, which is their whole strength, or supposed to be, right? So important to watch it and make sure that switch does flip at some point, because there are a lot of small companies that do what they do. So they have to have some sort of brand. They're trying to become like the Nerd Wallet, right, of insurance. So Nerd Wallet does credit cards, and you type best personal loan, Nerd Wallet shows up. So they do a ton of advertising as well. And then when people search, they also get that brand recognition as well. So I'm not sure people are yet searching and then seeing Lemonade results and then clicking on those Lemonade results, right? Because they trust the Lemonade brand. I think Lemonade is more of like in your face. Here's how you can save money on insurance, pet insurance, for example. Click this now, go through the sequence of web pages, and we're going to attribute the click into that ultimate lead. So where you fill out your information and you get that quote, there's a post back to Lemonade, and they get credit for that customer. So if they can't make that profitable, that's a problem. Now, There's also risks from catastrophic events, sure, all the normal insurance issues. But car insurance, yeah, they are still building out. This is the big one, car insurance. Car insurance is particularly tough because the margin is so low. Like, and you have to be incredibly aggressive to advertising, like saying you're going to get car insurance for like $20. You know, it's like, I'm not sure Lemonade wants to take on that risk. So we'll see what happens with future profitability updates. And if this revenue guidance gets hit, I'm not too worried about the revenue guidance getting hit. Like, that's not that monumental, like, because we know they can just spend more money on ads and then get more people to sign up, right? The really important part is, can this gross profit margin improve such that the margin is good enough that they're actually able to be profitable, right? That's what we're trying to target here. So that's pretty much the story. I mean, I can't even think of big investments that they could have. Like, I get that they have to have staff, but they don't have equipment really. So I'm really at a loss, honestly, for why they're at a loss. If they do become profitable, they could become the nerd wallet of tomorrow. But right now, this is definitely a 1 to 3 month hold, not a like multi-year hold. So there's only so much tech that they can invest in as well. So I honestly, guys, after all this like deep dive on Lemonade, I'm highly skeptical, except I really like the chart. So this is one of those situations where you got to trust the chart and the buyers. You know, it's like buying quantum stocks when they're up 80%. So this is the level to risk off of, 75. Buy that, look for $10-20, and then look for a big 10% move on that to get a gain. So if you like this idea, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube post section. And if you want one-on-one help, head over to stockscommunity.com. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.